A quiet but powerful shift is underway in global finance, led by the BRICS nations, Brazil, Russia, India, China, and South Africa. Together they've launched BRICS Pay, a new payment system designed to change how money moves across borders. This isn't just a technical upgrade, it's a geopolitical move with major consequences for trade and business. BRICS Pay is a digital highway for money, connecting banks and businesses directly, bypassing traditional Western-controlled networks. The goal: make cross-border payments faster, cheaper, and more direct, using local currencies instead of relying on the US dollar. Now, a business in Brazil can pay a supplier in India using their own currencies, reducing costs and risk. For decades, systems like SWIFT have dominated international transactions, but they're heavily influenced by Western policies. The BRICS nations, representing a huge share of the world's population and economy, want more financial independence. BRICS Pay is their answer, a tool for economic sovereignty in a fragmented world. This system now connects a vast network of countries, aiming to reshape global trade. We'll explore what BRICS Pay is, how it works, and why it matters. We'll look at its benefits, the challenges it faces, and how it compares to existing networks. Most importantly, we'll see what this means for the future of global finance. This is more than technology. It's about shifting power in the 21st century. The rise of BRICS Pay signals a new era in international payments. The world is watching as this bold experiment unfolds. The balance of global finance may never be the same. The BRICS payment system is the result of years of planning and a shared desire for financial independence. The global system has long centered on the US dollar and Western institutions, creating vulnerabilities for other nations. Economic sanctions and political leverage have made BRICS countries eager for a system immune to unilateral actions. Rising geopolitical tensions and frequent trade disputes made the need for autonomy urgent. BRICS leaders realized their economies were tied to a system they didn't control. By building their own payment infrastructure, they're asserting their place in the world. A key goal: promote the use of local currencies in trade, bypassing the dollar and reducing costs. Traditionally, even trade between India and Brazil required converting to dollars, adding fees and risk. BRICS Pay allows direct settlement in rubles, yuan, rupees, reals, or rands, strengthening their currencies. The digital revolution made this possible. China and India in particular are leaders in digital payments. Their domestic expertise is now being leveraged internationally. BRICS Pay is a product of both political will and technological capability. It's a response to a world ready for change. The timing couldn't be better. Digital payments are booming, and the appetite for alternatives is growing. BRICS Pay is more than a financial tool. It's a statement of independence. The world's financial architecture is being rewritten. The BRICS nations are determined to have a say. To understand BRICS Pay, we need to know its creators. BRICS is a diverse bloc: Brazil, Russia, India, China, and South Africa. Together, over 40% of the world's population and a quarter of global GDP. Despite different political systems, they share a goal: a greater voice in global governance. They see institutions like the World Bank and IMF as outdated and unrepresentative. Annual summits since 2009 have fostered cooperation, with the payment system as a major achievement. In 2024, new members joined Egypt, Ethiopia, Iran, and the UAE, expanding BRICS' economic weight and reach. These additions bring strategic assets, from energy reserves to key shipping lanes. The expanded BRICS is now a formidable economic alliance. Each member brings unique strengths: China's tech, India's market, Russia's resources, Brazil's agriculture, South Africa's gateway to Africa, and new members' diversity. This combination makes the BRICS payment system so significant. It's a project built on the collective power of dynamic economies. The group's expansion boosts the system's adoption and success. BRICS is no longer just a concept, it's a global force. BRICS Pay isn't a single global bank, it's a network of networks. It links domestic payment systems, building bridges between national financial highways. For example, it connects China's CIAPS, India's UPI, and Russia's SPFS. This allows money to flow directly between member countries, bypassing external intermediaries. The system's reach extends to 185 countries through direct and indirect partnerships. When a non-BRICS bank connects to a member system, it joins the wider network. A business in Argentina could pay a supplier in Thailand via the BRICS network if both are connected. Modern APIs make this possible, enabling banks to communicate and settle payments quickly. Currency conversion and settlement happen directly between central or designated banks. Many transactions settle in near real time, a major upgrade from traditional methods. Local currencies are central. An Indian importer pays in rupees, a Russian exporter receives rubles. By removing the dollar, the system cuts costs and shields users from dollar volatility. For businesses, BRICS Pay means lower costs and faster payments. Traditional cross-border transactions involve multiple banks and high fees, especially tough for small businesses. BRICS Pay eliminates many intermediaries, reducing transaction costs and currency conversion fees. Payments settle in hours, not days, improving cash flow and efficiency. Individuals benefit too. Migrant workers can send money home faster and cheaper, with more reaching their families. The system integrates with digital and mobile platforms, promoting financial inclusion. In places with limited banking but high mobile use, even remote artisans can access global markets. A craftswoman in Ethiopia could sell to a buyer in China and get paid directly on her phone. This opens new economic opportunities for millions previously excluded from global commerce. The system empowers both big corporations and everyday people. BRICS Pay is about making global trade accessible to all. It's a game changer for emerging economies. The benefits ripple far beyond the BRICS nations themselves. BRICS Pay is fundamentally different from legacy networks like SWIFT. SWIFT is a messaging network, not a payment system, and relies on a web of correspondent banks, often involving the US financial system. BRICS Pay integrates messaging and settlement, creating a streamlined, end-to-end solution. Governance is another key difference. SWIFT is Western-influenced, while BRICS Pay is jointly controlled by its members. This decentralized approach prevents any single country from weaponizing the system. The US dollar's dominance is also challenged. BRICS Pay prioritizes local currencies, promoting de-dollarization. It's not about replacing the dollar overnight, but about creating options and reducing dependency. Technologically, BRICS Pay is built for the digital age, using the latest fintech, digital currencies, and distributed ledger technology. This means greater efficiency, security, and transparency. For example, distributed ledgers can provide an immutable record of transactions, reducing fraud. BRICS Pay is designed for a multipolar world, not a unipolar one. It's a modern system for a new era of global finance. The competition it introduces could spur innovation industry-wide. The world's financial plumbing is being upgraded. Despite its promise, BRICS Pay faces major challenges. The dominance of the dollar in SWIFT is deeply entrenched. Changing habits and building trust will take time. Interoperability is tough. BRICS nations have different financial systems and regulations. Harmonizing standards for security, privacy, and anti-money laundering is complex but essential. Currency volatility is another hurdle. Some BRICS currencies are less stable than the dollar or euro. The system must ensure macroeconomic stability and may need new reserve assets or currency baskets. Geopolitical risks loom large. The West may see BRICS Pay as a challenge and push back. Success will require deep cooperation, technical excellence, and careful diplomacy. The stakes are high, but so is the potential reward. If BRICS Pay succeeds, it could reshape global trade patterns. Cheaper, easier payments will encourage more commerce within the BRICS network, shifting supply chains. Small and medium-sized businesses will gain access to global markets, leveling the playing field. Local currencies will play a bigger role, reducing demand for the US dollar and creating a more multipolar currency system. Central banks will have more freedom to manage their economies, less exposed to US policy or sanctions. The system could spark innovation, forcing existing players to improve and lower fees. Ultimately, businesses and individuals everywhere could benefit from faster, cheaper, and more accessible cross-border payments. The BRICS initiative could be the catalyst for a long-overdue modernization of global finance. The world's economic map is being redrawn. The ripple effects will be felt far beyond the BRICS nations. As of October 2025, BRICS Pay is more than just technology. It's a symbol of a changing world, The future of finance will be multipolar, with several payment networks coexisting. BRICS Pay will be a major pillar, offering alternatives for billions. Its success depends on trust, regulation, and technological integration. If it delivers, it could fundamentally alter global capital flows and empower developing nations. This isn't a zero-sum game. It's about balance and choice. Businesses and governments will have options, making the system more resilient. The rise of BRICS Pay marks a move from a unipolar to a multipolar financial world. The project's path is challenging, but its potential to reshape global finance is immense. The world is watching as a new chapter in economic history begins.